For joining us. Good morning, good afternoon, and good evening, depending on where you find yourself in the world. We are very pleased to have you all join us for today's inaugural Post-Trade Distributed Ledger Group webinar. Under the aegis of the Global Blockchain Business Council, the PTDL Group serves as the rallying point for prominent financial institutions and market infrastructure players whose shared vision of realizing the full potential of distributed ledger technologies has brought them together. We are very thankful to the PTDL Group's organizing committee, which is made up of representatives from BTG Pactual, CLS Bank International, London Stock Exchange Group, Norton Rose Fulbright, State Street, Six Digital Exchange, and the Global Blockchain Business Council for organizing today's webinar and making it available to the broader finance and blockchain communities. Today's webinar will focus on the future of trade and post-trade services and ask the question, where do we go from here? The webinar will be led by GBBC CEO Sandra and PTDL Lead Richard Shade, with leading players in the industry. We are delighted to have representatives from the PTDL's organizing committee and GBBC member companies join today's discussion. Before we begin, I'd like to briefly introduce our speakers. We have Albert Weatherill. He is a senior associate at Norton Rose Fulbright's Financial Services Group in London. We have Benjamin Nadareski. He leads Global Corporate Business Development at Six Digital Exchange. Michele Curtoni, Vice President for Digital Product Development and DLT at State Street. Michael Coletta, Head of Blockchain and Emerging Tech Innovation and Strategy at the London Stock Exchange Group. We will be taking questions from the audience at any point during today's webinar, so we encourage you to submit them at the Q&A box at the bottom of your Zoom screen. And without further ado, I'd like to hand things off to our hosts, Sandra and Richard. Thank you. Hi, Sandra. Apologies. I think you're muted.
Thank you, Sophia. Really appreciate the kind intro, and really delighted to have former colleagues, cohorts in the market infrastructure sector, as well as members of the PTDL OC. I'm going to just start off by saying, what is PTDL for those who may not be an insider on some of the history around PTDL? I'm just going to give you a quick background. So November 2015. Seems awfully long ago, but a group of market infrastructure firms got together in London and asked the question, distributed ledger technology, blockchain, what is this? What are we going to do about this? It was started as a group to really focus on post-trade service use cases and understanding around if indeed DLT and blockchain could help, mainly with efficiency plays, but also potentially other use cases. Michele was there. He was actually at a different firm at the time. We had a number of other folks from UK banks, and it kicked off then, very organically, very small, and frankly, the fact that it still exists 5 years later is a testament to the fact that the conversations evolved. Now it's not just about post-trade, it's actually about the entire life cycle of trading amongst experts in the trading industry who don't have to explain things like settlement finality or concepts around how important issues are around reconciliation and also any manner of pre-trade trading and post-trade issues. So with that, it's normally a closed group. This is an opportunity today where we have our inaugural webinar where we've actually opened it to the public. So I am happy to co-host this with my fellow former colleague, Richard Shade. We both worked out of the London office at CME Group, CME Europe. Richard, please say hello and kick us off.
Thank you, Sandra. Hey, everybody, and thank you for joining. So let's start before we delve into the detail by introducing the panel. And we'll start with the effervescent Michael Coletta from the London Stock Exchange Group. Mike, could you give us a quick update on what your role is and any particular projects that the London Stock Exchange Group are working on, please?
Yeah, yes, thanks for having me. And apologies for wearing a t-shirt. I just got off a flight from the States to London today, actually. So I'm happy to be here anyway. Yeah, so my role at the London Stock Exchange Group initially kicked off as focusing on just blockchain applications across all of our businesses. And I think it makes sense to pause for a second and just answer the kind of question in the back, well, not in the back of everyone's head, but just kind of correct the assumption of what the London Stock Exchange Group is. So yes, it is the capital market, the London Stock Exchange, but it formed out of the merger of Borsa Italiana and the London Stock Exchange. And that broadly covers capital markets. But then of course we have FTSE Russell division, which covers information services. So, totally different type of business. It's focused on data, right, and different clients. And we also have the post-trade or risk management organization, which is the LCH. It is not the London Clearinghouse, even though it is the London Clearinghouse, similar to how BP is not British Petroleum, but BP. And of course, we have our ongoing merger with Refinitiv, which is another large data organization. So, and then also, finally, similar to NASDAQ, we have a technology business called Millennium, relabeled as LSEG Technology. So we span the entire gamut, really, of financial market infrastructure and its relative products and clients. So we've got a really wide base. So that goes into what I'll say about where we're going, right? So we cover this wide base of financial services, essentially. So my role kicked off as doing blockchain innovation across those businesses, but increasingly, really, largely, a lot of these kind of emerging tech roles are really about, building new business models and product development as well. So the job now is focused on a few interesting things. So beyond blockchain, really, we're looking at what's the future of our industry as financial market infrastructure and finance more broadly? Like, what are clients looking for? Where is the we're seeing all this kind of solution, these new types of solutions emerging from fintech startups, right, around tackling different problems, whether it be the hot issuance area, right, with trying to do something like a security token offering to post-trade solutions for managing collateral instantaneously, or central bank digital currencies, right? So really, looking at all of that, it makes sense that we kind of embrace a more broad business model focused role in creating innovation in the organization. So that's precisely what I do. And I think the interesting angle here is, because we are a regulated, we're a heavily regulated institution, right, as a financial market infrastructure company. It's essentially the backbone, right, of the economy, not for central banking, but rather for everything else. Regulation is first and foremost in my mind as far as what is possible, because of course we always have the kind of the big bang solutions, right? The pure decentralization enthusiasts that are looking to disrupt everything, right? Change the entire system, right? Knock it all down, start over. And I think we have to take a pragmatic approach, because ultimately these institutions, right, exist at the behest of governments in a lot of ways to provide stable financial markets, right? Equal information dissemination, right? Stability, consumer protection, right? All of these kind of fundamental principles that you can't really necessarily decentralize and hope to kind of continue. So, I'll give you the example of, ICOs, right? I mean, as a simple example, right? So if you were to give just free and open access to, a capital market per se, right? You're not going to ensure that there's equal dissemination of information for all investors. So you could have insider trading. You're not going to have the kind of standard set of disclosures on what the company is or what funds are looking to be raised. And there's no real standard, right? So these are just kind of basic principles. But, right, what are they looking for? They're looking for a simplified way, right, to access capital markets, to digitally use financial services, right? So essentially APIs, right? So we have that kind of in banking. If you look at open banking in Europe, right, it's made a lot of advances in that regard. Now you move over to the securities side, right, which is, it's just another asset, right? It's not cash, but it's a lot more complicated. And there's less progress. And why is that? Well, what we'll see in our discussion, right, is that there's a number of market participants, complex workflows that kind of bog this down. But who's to lead?
Yeah. So Mike, I think you touched upon a number of topics that we're going to be covering today in more depth. I want to move over to Ben to talk about SDX, Six Digital Exchange. I want to welcome Ben as our latest member of the Post-Trade Distributed Ledger Group Organizing Committee. Ben, you're currently on mute, so hopefully you'll be able to introduce yourself. But one point I do want to raise and highlight that Mike has raised. The pipes of the global existing financial service markets are vast and deep, and they function. And it's a conversation I actually had with Sven from State Street last week, a couple weeks ago. You never get thanked as market infrastructure for when things go well. Nobody ever writes you an email or pat you on the back for, oh, it ran well today, right? You put $6 trillion through the FX markets like you normally do every day. You only get highlighted as market infrastructure when things go wrong, or when you try something new and you fail. And that's actually a real dilemma. So with that, I'd love Ben to talk about, what it's like running something brand new and amazing and exciting, but yet he also has an existing deep and an important market infrastructure.
Absolutely. Thank you so much, Sandra. I just want to start by saying on behalf of SIX and STX, we're very excited to have joined GBBC and the PTDL. As far as the organizing committee goes, excited to kick this engagement off. So my role, Benjamin Nadareski at STX here, is I oversee the corporate development function, strategic partnerships and investments. As a very brief background, I'm also a visiting lecturer at the Wharton School at University of Pennsylvania for digital assets and financial technology, previously coming from a blockchain startup called DrumG, where we launched some institutional products on Ethereum platform into market, and then prior to that into R3 and a background in trading. At SDX, very, very, very simply, SDX is a fully integrated issuance, trading, settlement, and custody infrastructure platform. Our parent group, SIX Group, is the National Stock Exchange of Switzerland. We are a solely owned subsidiary of them, but SDX is uniquely positioned in between traditional market financial infrastructure, similar to the London Stock Exchange, and the fully integrated digital asset ecosystem. So being positioned directly in the middle of them, we're able to see the institutional requests and the high level of scrutiny that financial market infrastructure plays need to go through to get into market, while we're actively integrated with the highly innovative partners in the fintech space. In 2020, for a very quick update on some of the initiatives that SDX is driving, our primary focus in 2020 is looking at debt and equity digitized products into marketplace. And we're working with a large network of leading financial institutions to drive this forward. And what we've seen over the blockchain space over the last 5 to 6 years is this narrative evolve into, obviously we're past the POCs, we're past even the pilot phases, but this production value for institutional grade digital assets is still on hold. And a primary reason for that is we're seeing is the liquidity issue, because no one's broken through that barrier of being able to get an exchange venue, get a CSD venue, get a regulated venue into marketplace, so that institutional players that have digitized access and digitized assets across the board can start giving them access more globally. Obviously, with the promise of digital assets and blockchain, this global access, democratized access to finance is such a big part, but that can only come to fruition if there are these core financial market infrastructure plays in place that are regulated by systematically important exchanges and systematically important entities across the different jurisdictions. So SDX is uniquely positioned for that, starting in Switzerland with a global focus, expanding out into Europe with SIX Group's recent acquisition of the Spanish stock exchange, BME, and so on. So those are quick highlights for the SDX side, but looking forward to get stuck in. Thank you, Sandra.
Thanks, Ben. And from our newest member of the OC to probably our oldest member of the OC, but not in terms of age, obviously that's me, Michele Curtoni from State Street. Michele's been in the blockchain space for a very long time, and as I said, was one of the founding members of PTDL. So Michele, could you give us a quick update on your role at State Street and anything that State Street are looking at the moment in terms of blockchain?
Sure thing. So yes, I am the oldest with Sandra.
You are an OG.
And some other folks that actually still work here. I'm an OG. That's the definition. So State Street is, very quickly, for those who don't know, it's an asset servicer, but so we service asset all across the investment life cycle. So from, you name it, from trade, transfer agency to FX management, we outsource FX trading solutions, we have research, we have ESG investing advice, we have obviously the custody angle, safekeeping, reporting, tax management, you name it. So there's a lot of different services built in one single company. And then since 2017 or early 18, there was an acquisition of CRD, Charles River. And from then there was a new strategy of the company called Alpha to create a front to back platform to support that investment life cycle for our customers, which are pension funds, hedge funds, and many others. Obviously, we play also a big role in financial market infrastructure, being a global custodian. I personally been at State Street now for 2 years in a team that, as Sandra and Richard said, is called Digital Product Development. really, I sit in global markets, and my objectives and the things I work on are namely two. So one is new product development, and then there's a technology implementation angle. So now I'm leading a number of kind of blockchain application implementation and integration in our backend systems, and then at the same time lead the new product development for what new applications might be, with the eye of, as assets are being, and Michael touched upon it earlier, as assets are being issued in different ways, they have to be serviced in different ways. So that's where we come in. The other very interesting angle that we worked in is cash or money. And that's maybe, you know, we're working very closely with a company called Finality, which is a number of banks, 15 financial institutions, part of, really started this Finality, formerly known as Utility Settlement Coin, and that's a good chunk of my time. Others, but I think we can touch upon it. We ran a couple of proof of concept with Vanguard, the asset manager, and Bank of New York, and other Citi and other banks around issuance of bonds, and then assets. Sorry, and then FX assets, and you know, 30 days forwards, and to implement to help the efficiency of how you create and manage these assets. So in a nutshell, this is what I do. 2 years at State Street, and prior to that, I was with Michael for a very short time, unfortunately. So I stayed 7 to 8 years at the London Stock Exchange. That's where I met Sandra and all the team.
Yes, Michele raises an excellent point that the community is much smaller than we all imagine sometimes, and we do some musical chairs, and at one point, I think all of us were in London, well, probably at the time that we created PTDL, and the circles are small and fairly tight. So I'm gonna move on to Albert, because he's got a very unique vantage point, as we are very fortunate to have him engaging not only with lots of different financial services institutions, but also he works with fintechs and looks across the ecosystem for DLT, blockchain, and crypto assets. So Albert, could you give us your perspective on some of the things that you've seen over the years, especially over the last 5 years, that you think the audience would be interested in hearing about, especially from any legal and regulatory perspective?
Of course. Thank you for having us. I mean, I think one of the key things I've seen over the course of the years we've been working with PTDL is a real kind of movement in acceptance and understanding of what these assets are and how they're used. And I think very early on, lots of regulators, lots of authorities were very much in kind of education mode. They didn't really understand the use cases. They didn't really understand what the value proposition was. There was a perception that digital assets were predominantly just a mechanism to funnel criminal proceeds around the financial ecosystem. There wasn't really that recognition of what the value chain was. And so we've certainly moved on a lot now. And I think particularly in the kind of last 9 to 12 months, we're moving into a place where, from a legal and regulatory perspective, there is increasing clarity across a range of jurisdictions about what digital assets and what blockchain use cases and DLT use cases actually are and what they consist of from a legal and reg standpoint. Now, I think it's often strange to sit and talk about the whole kind of baseline debate about what something is. I mean, it's a question in many other forms of financial services. We've settled that a long time ago, and there's no real need for us to re-examine it. Whereas in this particular space, because of the novel nature, the structure, the novel infrastructure, there has been lots of questions and lots of education about exactly what these things are, how we treat digital assets, how we deal with them. And you know, from the reason why that's important is because until such times we can move forward with clarity about what something is, you don't know how you hold it, how you treat it, whether you can hold it as security, whether you can collateralize it, how you sell it, how you buy it. All these things which we've kind of come to pass with more common dematerialized securities, we've yet to really fully solve. But in the last 9 to 12 months, we've had a couple of high court decisions here in the UK where the legal status of Bitcoin was kind of indirectly assessed. So we've got a little bit of authority there now. We've had the UK jurisdictional task force paper, which was, I think, very informative, and that has been relied on in those court hearings I just mentioned. We've had greater guidance from the FCA. We've had clearer directions of travel from other regulators about what they think. We've had some kind of regimes implemented related to digital assets. And so overall, we're getting towards that level of clarity where we are trying to take our existing laws and regulations, and we're either applying them to understand how we apply them or we're starting to create new regimes. And I think the more certainty we get, the greater that will fuel adoption. And I think that's particularly true with financial institutions who need that legal certainty because, you know, the regulatory risk profile and the overall, you know, insolvency credit market risk profile is huge for those institutions. And so I think, to coin a kind of sports analogy in terms of where we are, I think we're kind of at the 40-yard line in our own half. I think we've still got a way to go in terms of bringing people along that journey and getting to a place of greater certainty, which will fuel adoption. But I'm certainly confident we're going to get there. And I think the reason for that is because of the increasing levels of adoption and increasing recognition that this is not just a kind of niche product for kind of die-hard enthusiasts, but increasingly this is becoming a whole new asset class, and one in which the regulators are going to have to wise up to, and we're going to have to build our legal system to support it.
Excellent, thank you. And that actually leads me quite nicely into our first question. So we'll start with something fairly wide open and fairly broad, but what do you see as some of the biggest opportunities or the challenges where we can use digital assets, crypto assets, or even tokenization to take advantage of those opportunities or to help with those challenges? Let's start with Mike.
Yeah, so I think actually, you know, a great point is made by the Norton Rose panelists. So the legal structure, right, underpinning. Again, let's remind ourselves just quickly that the everything that isn't, so not a cryptocurrency, right, is, you know, all the blockchain really is doing, right, in the tokenization world is representing an asset digitally as a system of record. But you ask yourself, what are these systems of record that we have? Like, what is a central bank, you know, what is central bank currency anyway? What is commercial bank money? What is a security position that you hold, or, you know, security holding you hold? It's nothing more than a legal structure, right, in a legal jurisdiction, right, with law and, you know, with this rule of law, right, and the faith of the people, right, that use that jurisdiction to use that legal structure. So I think, you know, I mean, obviously the opportunity is really one of, I call it, you know, it's open finance. It's the next generation of open finance. So it's akin to open banking, but it's essentially allowing for the individual, like, market participants, so that, you know, people like, let's say, retail investors, companies that want to raise capital, global custodians that want to directly interact with their assets, right, programmatically interact with their assets. So tokenization is really bringing the settlement workflow, right, and extending that out to the participants rather than waiting for, you know, I send you an instruction, you do something to, you know, in your system, you send an instruction further down the line to maybe like a settlement entity, like a central securities depository. The tokenization aspect is essentially giving you the direct programmatic access to your assets. So once you have data, right, and the value programmatically together, right, you have a lot of power in the, you know, to access financial services, to use the things that we've already built upon, right, and to leverage those legal structures without introducing new risks, right? That's the point. We're offering scalability with essentially no new risks, because that's why we intermediate. I hope that wasn't too abstract.
No, I don't think so. Michele, have you got anything to add?
I think the easy way that I can explain internally, at least, the benefits of this technology we're working with are really in two ways, and Michael alluded to some of this. So one is the creation of the asset. Okay, so the as we all know, like I'm going to use a lot of buzzwords, but reduction of intermediaries, you know, speed, increased speed of time to actually create the assets in terms of, you know, the legal contracts, in terms of the capture holder and all those kind of things. So that's one. We don't really play in that. We're not an issuer. However, we play a lot of roles around it once the asset is created. So we kind of really have to stay on top of all of those things. And we noticed that most of probably the use cases out there start with the asset creation, and so our role has to change into that new workflow. So we have to kind of figure that out from a strategic perspective. The second element, what comes below that, is the underlying infrastructure and the new capabilities that it brings. And now redesigning the financial market infrastructure definitely is not easy. Definitely, maybe it's part of our job. But what we soon realize is that there's the mismatch between new markets being created, the new capabilities, and then what the old world is. So most of my time is now spent really looking backward in the application and what can be done, what can not be done, to also continue service the client seemingly across the different assets and they're created, because we look at a portfolio view, right? So how you help an hedge fund or an investor at the portfolio level, and how an infrastructure or a capability or a functionality benefit can flow down to the client. So maybe that's kind of where at the intersection where I have most of my interest, to really find good applications. And then again, they're split into just create an asset and let it live on something, hoping that that's new the infrastructure later, or then relook behind your back and open finance. Michael mentioned all the open APIs and all those kind of things. So you have to be ready on a multiple and a variety of angles. In a simple answer, so these asset issuance and maybe the replatforming or redesigning of complicated assets and the servicing of those, fund administration, all those things, that's where I think there's a lot of short-term benefit. From a long-term perspective, obviously it is the infrastructure change, where however the opportunities come short is really, and what the obstacles are is, one, cultural, two, education, and three, that it's very hard to push new business models where the market is not there and the benefits come later on. So a big organization require big things to move into, big budgets, big tickets, big clients, and we haven't seen that as yet to really push things forward. Benjamin will have probably a different view. Our colleagues in Australia will have a different view because they've done things differently. But from a custodian perspective, that's kind of what we've seen. Well, eyes open to a lot of opportunities that are coming through.
Yeah, Ben, do you want to follow up with that?
Absolutely, and largely agree there on those points. I'm going to take the question in a slightly different way. The biggest challenges and risks that we see. Obviously, in the opportunity space, everyone on the call, and I'm sure across all the listeners, the benefits of blockchain have been so well articulated over the past 5 years that everyone could repeat the same narrative. Seamless transactions, cross-border payments will become easier, T0 transactions, right? The same narratives have been repeating itself over the industry. The difference between us realizing the business value unlocked with those and where we are today is the fact that when these projects get pushed through, the business value accrued on the commercial side is often lost. And so when you look to internal pitches, you look to internal validation, or you look to internal approvals to get these projects over the line, or spend that extra budget to get those legal regulatory licenses that are so crucial, all of those pieces of the puzzle are cornerstones to getting these projects over the line. And making sure that at the end of the day, these projects are not driven by technology, but by solution. It's always business value, solution first, technology second. And the way that the blockchain industry has evolved to date has been blockchain first. This is going to solve the world. It's going to fix poverty and solve world hunger. And we're going to do everything in between. And then, oh, by the way, we might want to get some business value out of it. Once we flip that narrative around, we start to change the dynamics, and we change the way that we approach a lot of these developments very, very succinctly. So a great example of that is when we look for example, in the data world. The data world is so siloed, the data world is so protected and captured into so many different pieces of that value chain that once you start talking about a fully democratized data solution that's open access, that's everyone's able to participate in, that has equal fee sharing, well, those institutional protected competitive data sets are not going to open up to that model. You need to have on-ramped models in order to take certain pieces of the value chain, recognize commercial value on day one, and show a path over time for it. And that's why we think in the financial market infrastructure play, the digital asset institutional side ecosystem has been such on pause for launch, because we've seen non-bankable assets, we've seen crypto, we've seen loyalty points, we've seen all of these different addressing of the markets from the outside, because that core piece, there's a huge hurdle to get there. And that hurdle is regulatory licenses and liquidity. So those 2 points are the biggest challenges and risks to getting institutional digital asset infrastructure into market and starting to see exchange and CSD functionality with those digital assets.
Thanks
cool.
for that.
Thank you. Cool.
Yeah, absolutely.
That's great.
And I'm gonna, for the audience, we will start taking questions from the audience to the panelists in about 10 minutes, but hold on, keep them coming. I'm really happy to see that people have been dropping in questions, but for right now, I do want to delve a little bit deeper into some of the topics that our panelists have raised as issues about financial institutions and market infrastructure in particular, making the case, especially internally, to spend lots of money on investment in something that doesn't necessarily look like, or you can guarantee will have a significant ROI. So let's talk about some of these gaps, because that is something that I don't think gets talked about a lot. But the reality is it's usually one or two small groups of people internally, like yourselves here, who make the case for spending money on X to do Y, and making best guesstimates on what the benefits are for that. When you think about the arguments and sort of the cases that you've made, going forward in the successful yes buy-in scenarios, what do you think has been the most effective thing that you guys have done to get everyone on board? Because you do need the established sort of C-suite as well as other colleagues in other business lines to come along with you. Is that not true? Let's start with Mike, and then we'll go to anyone else who wants to chime in.
Yeah, so it's so funny because I was just working on a deck to this effect, internally, just on some of the stuff we're working on, right? So the internal, if you will, the internal sale, like, and how many times do we get the question, why blockchain? What's the point of this again? But so how do we end up convincing them? I think, number one, and thank you, STX, right, is FOMO, right, or fear of missing out. I think it definitely plagues every organization. So when we see an example, of another company in our space doing something that's of meaningful size, so not just a fintechs, of course. So FOMO actually, and just showcasing what's going on in meaningful ways, right? So if we've got one bold player or a few bold players, so ASX, right, SDX are prime examples of that, but there's plenty of others. Then the kind of like the fintechs that keep coming to you over and over and over again, right? So that repetitive kind of nature of some of the fintechs where you're like, oh my God, they see the problem, but they just can't, they're like essentially token islands, right? They need to, they have this kind of commoditized problem they're solving for, but they need the pluggable infrastructure. So we see this, the other piece is showcasing the repetitive problem that fintechs or new entrants are trying to solve. So FOMO, new entrants trying to solve a similar problem. And I think the other piece is also looking at the value chain and framing it in a way that's like, we're going to solidify our role in this value chain rather than just kind of keeping with our existing businesses. We're actually streamlining the end-to-end value chain of like the life cycle of, let's say, equities or bonds, right? So it's not just issuance or trading, but it's also the post-trade use cases. So it's kind of bringing those two value pieces together and effectively organizing and focusing on the commercial value that it brings to, let's say, the post-trade division and the capital markets division simultaneously. And that's been the approach that I've taken internally, right, to kind of advocate, and you get these people together, and finally the post-trade division, which you can't have the capital markets division without the post-trade division, are talking to each other. So in that whole FOMO opportunity context, and as long as you clearly articulate and have a vision of that makes some sort of sense, I think, yeah, it's effective. I mean, now the budgeting, right? That's another discussion.
Sure, I'll leave it at that. Albert, what have you seen in terms of some of the large FIs? Do you see more coming in, especially amongst competition, seeing that others have come in?
Yeah, I think so. I think what we've seen is working on a few things with some, more traditional and risk-averse financial institutions who have decided, that they can leverage their existing service offering and now cater for this broader market that is there. And, that means, partly kind of trying to translate some of the elements of this new product, this new type of client that typically they wouldn't have had before. Maybe they're onboarding a crypto exchange to custody those assets, or maybe they're providing kind of administrative services or even just banking services to these entities. And I think where you get to is, I think, a recognition that there can be an adapting of processes to meet with what these new requirements are and the demands for these companies, these new companies that our more traditional clients are dealing with. And I think certainly in that context, you have a situation where you have your more traditional FIs who now I think are seeing more clearly the benefits for working with these elements of the institution and leveraging their own innovation works to bring that in with those new clients. I mean, I think from a perspective of what we see with our clients on some of the larger projects we've worked on in the blockchain space, I think there was a lot of, I mean, especially there was a lot of hype, a few years ago, everything was going to be on the blockchain. We were going to do everything, a bit like what Ben says, regardless of what the value proposition was, we had money to spend and we were going to spend it. And I think some of those projects, have tailed a little bit, they've stalled. And I think certainly in the current environment, what we're seeing with our clients is they're looking a bit more conservative about how you deploy capital for these types of projects. And I think, to Michael's point, it goes to, I think, less of the kind of grand, we're going to do everything on this, and more kind of looking on a more honed and tailored basis that says, how can we add, how can we be accretive in our processes? How can we add more tailored value in the broader propositions? And how do we get there? And what can we use technology for in that sense? And so I think maybe the kind of grand plan is scaled, sort of almost scaled down slightly, but I think now is perhaps more attainable. And I think that's something, it seems to us at least, when we're talking with the business leads and we're talking with others, I think that's something people want to see. They want ROI, they want attainability in terms of spend. And I think that's certainly a trend that we've seen more, and I would expect to see more of if economic conditions do remain sluggish for a period of time.
Right. Michele, do you have any thoughts?
Yeah, quite a few actually. That's super interesting things. I found that the answers always change depending who you talk to. So I've seen the ability and capabilities angle being very, very strong in technology organizations, especially in a bank like 50,000 people. It's it's important that you always stay on top of what the new initiative is, and you can deploy the newest orchestration platforms, whatever, Kubernetes or whatever else, or can link seamlessly and spin up anything on a cloud environment, whatever that might be, Azure, AWS, GCP, VM. However, the FOMO and what do my competitors do and where are my clients, I think is really it's the monopoly thought in most of the organization, at least driven by customers. So we always have to showcase the value to the client, the fact that we're not doing things dramatically different from competitors, but at the same time, we need to show that we are driving a conversation. So eventually this angle of driving the conversation, being able to redefine the market as a leader, I think it really brings the result home. A success of this has been Finality, as I mentioned earlier, where it was a big size ticket for an organization that did not invest prior in any other blockchain projects. And the thing was, if money is changing, if central banks start thinking about central bank digital currencies, you see Libra, you see JP Morgan coin, you see all of those things, I want to have an answer where I can lead there. That is away from commercial banking as a commercial money, that is like an institutional wholesale piece, and a payment system that can redesign the infrastructure. So defining the storyline for your own destiny and how you take control of this, that kind of really hammered the dome, and I hope I can do more and more of those conversations in the future.
Great. Richard, do you want to take one more question off your list, and then we'll move on to the Q&A questions?
Yeah, just it's quite a big topic, but potentially interesting. So obviously at the moment, everybody is talking about CBBCs and central bank digital currencies, such as the Chinese DCEP project. Even Andrew Bailey said on Monday, or mentioned it potentially for the UK. And then plus private stable coins such as Libra. How do you see the future of those developing in terms of their impact to your businesses, and whether or not you can actually get involved, take advantage, or can you, basically? Let's start with Ben.
Absolutely. On the financial market infrastructure side, CBDCs in the digital asset space will be a core piece to this. And most transactions on the asset flow, there will be a cash payout, cash leg somewhere that will need that facilitation. And going off to on ledger in any of these transactions is just recreating several different processes, separate silos of different fee generation, to be blunt, for several different organizations to capture, which creates the same system which we're innovating. So this CBDC piece will pull the full piece of the end-to-end solution together. It's public knowledge that SDX is working directly with the Swiss National Bank in the tokenization of the Swiss franc. And we're working on several other initiatives on that front to drive CBDC adoption. Obviously, the FOMO effect on CBDCs is real, starting with Ubin, going to Lion Rock, Dania, and so on, across Asia, across into now the Fed in the US here is looking at this more seriously than ever. The CBDC adoption rate has been increasing over time. The real breakthrough will be as soon as they're able to start transactions from those M1, M2 money markets into the corporate lending flow, into getting these CBDCs into circulations and small white labeled pools. Once we start to see that piece of the adoption curve hit, then we'll start seeing it be trickled down into the use cases that a lot of us on the call here are looking at. So from the financial market infrastructure side, from the exchange venue side, from the major tier corporate lending side, and from the payouts for the digital issuances, listing, and equity tradings, and so on, that we'll be able to use that for. We're not quite at that point yet. We need the institutional adoption to be driven from the regulators and central banks, and it's our effort and it's our responsibility to advise, promote, and bring CBDC awareness to light so that we can get those initiatives through.
Oh, thank you. Mike, I mean, there's the same question to you, really. How does it impact LSEG at the moment?
So CBDC.
Or stable coins.
Well, yeah, so actually it's an interesting discussion. So I leverage this as well, and it's not exactly my FOMO, but to kind of point to the theme that's occurring and where the gap in the market is. So what I mean by that is, going back to the point about legal structures again, again, what is this, like these stable coins, right? Like, so, Tether, USD. So essentially, right, they're nothing more than these security holding structure, right? So you have a pool of assets in an account, right? And it's being essentially allocated, right, on a dollar by dollar basis. In the Libris case, whenever they, come to a conclusion, but again, it's essentially a committee organizing around what asset portfolio should we hold on behalf of our Libra clients, right? So what is this? Again, these smell and sound a lot like things like electronically traded funds, ETFs, right? They sound a lot like, essentially different security structures that we have today. So what is it, so what's the fundamental that they need, or what are they doing? Well, Libra benefits from the fact that Facebook has a massive user base. And they're immediately moving into a vertical of, financial services rather than just dealing in, boring photos of your neighbor's dog. There's data, right? Of course, that's their special sauce. But what do they need? They need scalable access to, the creation, right, and use of a security structure that is scalable and doesn't introduce new risks. That's what they're doing. So what do we do in financial market infrastructure? We provide the electronic systems, whether blockchain or not blockchain, right, that essentially scale these legal structures. But the novel aspect is blockchain enables, right, makes it much more simplistic for the individual users or participants to directly digitally access these asset structures. So why aren't we providing that infrastructure to them? Like, it's not that, it's not that they're disrupting our business per se, but it's just to recontemplate how we look at scaling and distributing what we already do, right? So I think, to me, it advances the conversation and increases the use cases drastically. CBDC is, another one of these examples where it's like, hey guys, the most conservative part of our already conservative industry, the central bank, right, is talking about central bank digital currency, which is the complementary, like the payment side of our delivery side, right? So it's the necessary piece. So it's like, unless we get our act together, we're gonna be behind. So I think CBDC just speaks volumes for the fact that the most conservative part of the financial market infrastructure per se, right, banking, is catching up, right? So we need to act. So I think Yeah, so it's A, on uptake and use cases and potential future business, and B, the fact that that's, it speaks for the direction that the industry is moving in.
So going to for that, Mike, we're going to go and now take some tough questions from the audience. And the first one here is going to go out to all of you for a view, because I think it's actually an amazing question. It was originally, I think, targeted to Mike only because you kicked off talking about securities and how it's managed. So the question is, and I'm going to paraphrase here from Sapide, which is around market access. So are there better ways to manage the global financial markets where it's equally accessible to other people as well as the rich? 10% or less actually hold 90% of the global wealth. And when you look at securities and equity holdings, statistics are pretty low. I think at the last WFE gathering, someone said it's single digit if you look globally at who holds global equities. So single digit population in the world holds actual equities in any portfolio. So with that, if do you have views on how blockchain and or your business models can look at including more and distributing more efficiently and provide more access through your members than ultimately to retail is, I think, the question.
Yeah, so I mean, again, that goes back to the point I was making about, so we per se, like, of course, we want as many people to access markets as possible. I mean, it's in our best interests, right? I mean, we're incentivized in every way to do that. I think there's some larger elements at play to specifically address that point. But again, going to the point of what we do. So we provide systems of scale, right, that handle these legal structures. What is blockchain doing? It's essentially tackling a major workflow problem, right? And it's making it easier for a lot of these types of innovators in the space to access the underlying infrastructure, to, issue a security, to settle a security, to provide and provision like an experience through an app, right, on your phone. So I think it essentially is delivering on that, and that is one of the fundamental goals. To address some of the really specific, like, macroeconomic challenges about, where wealth is distributed, it's a really complicated question, but I think it definitely facilitates and greases the wheels for making that happen.
Ben?
I'll say two things. On the wealth distribution front, the crypto side is even worse, which is worse to say, but it's the truth. Of even exponentially smaller percentage of the global wealth population in crypto holds a ridiculous amount. And on top of that, hold the power to control market moves and control major influences on these markets for personal profit gains. So the crypto world has a lot of transformation to go through in order to get to a point where democratization is actually realized. Now, on the institutional side, I'll just say very quickly, one interesting piece is the non-bankable space. Transforming these formerly non-bankable assets into bookable securities as a first step allows for things like fractionalization of equities, fractionalization of artwork, fractionalization of traditional luxury assets that now others can participate in the returns for. If you could own 1% of a Picasso over time and you realize that had better returns than the S&P 500 over the last 5 years, that's a great point of access for anybody in the world to touch base on without having to go through an incredibly scrutinous process to get access to art. So the non-bankable space specifically, I think blockchain will have a truly transformational effect on. While on the more core pieces of debt, equity, loans, so on and so forth, it will really just be breaking down these walled gardens between each of these institutions so that there's more seamless flow, easier access, less fee generation and hidden access, but that won't really democratize the global equity market. I think it'll start with the non-bankables, and as the adoption increases from time, we'll see a good rate.
Albert, are there legal and regulatory challenges to really democratize access? Do you think that technology is really technology that could help facilitate broader access to securities markets, for example, or markets in general?
I mean, I think that there's always some degree of regulatory risk. I mean, how you slice and dice a piece of property and how you split that and what people's interests in that are and how you deal with them are inherent legal issues. But I think, the concept of fractionalization is not necessarily new from a legal perspective. And so I think more so, it really is the technology that drives this. I mean, I couldn't agree more with what Ben was saying. I mean, I've always thought about it as one of the key benefits from a retail side is, this entire technology is built to be delivered electronically. It's built for people who don't have bank accounts, but who have phones, who have electronic devices, who are able to interact, with this particular element of the financial system, but perhaps are forgotten or de-risked by other elements of the financial system. And so I think the nature of the assets and the ability to utilize technology to create tokens and fractionalization and to create whole different asset classes, I think it can take things that are immovable and illiquid, and it can make them liquid, and it can give you a piece of something that you otherwise would not be allowed to have access to, or typically you would only be able, a tiny fraction of the consumers of financial service would ever have access to it. And I think that is an incredibly powerful element. It gives us an opportunity to access areas of our financial ecosystem that typically we wouldn't, that would be off limits to us, and it gives us an ability to, have community ownership of more asset classes, and, to raise finance for businesses and projects in ways that typically we would never be able to with more traditional, debt and equity capital markets raising. So I think there's clearly a value stream, from the infrastructure end. It's got to trickle down through to providers who are retail facing, but I think it will be technology that gets us there. And I certainly think, to a degree, from a regulatory and legal standpoint, it will be more beneficial, clearly, to have more robust access to financial services, and a greater democratization of that access than if it remains a kind of closed loop, because that inevitably leads to poorer outcomes for those who are less influential and less, and less wealthy, frankly, in our society. Yeah, so I couldn't agree more with what Ben was saying there.
And I'm going to tweak the question slightly for Michele, just because he does represent significant assets under not only custody but management, in terms of for your institutional clients. When you mentioned Libra, and there are definitely other stable coins out there trying to really help promote access to those who are, as many call, unbanked or left out of the financial services system. How big would a stable coin have to be? And I'm not singling out Libra, any of them would have to be if they were to be able to crack the code of providing access. How big do they need to be in order for a State Street to be able to, think about accommodating, or is that going to come directly from your institutional clients who decide to adopt stable coins and incorporate that into their businesses?
Like how you tweaked the question, Sandra. Besides internal audit and compliance, nobody ever asked me that question. So, which they do. So, as we said, there is stablecoin which have a retail angle behind it. Like even CBDC can be a retail only, and many of the central banks have been talking about retail. So whenever we comment, we say, okay, don't care for now. I look at institutions, so I care from an institutional perspective when there is an RTGS system involved, when there's an account at the central bank with 16, I think, in the UK only have access to. So that's what I care. However, that's what we look. We look at the value transfer when the liability of that claim is held at the financial infrastructure, such as the central bank, or sometimes when it's at a commercial bank. So when the liability is at a commercial bank, we then look at servicing that, right? So we have done some deals in the past, and some are public, where we hold the cash for some of the stable coins with whatever objectives they have in mind, right? If that's serving the unbanked or not. What I care of is the AML procedures that they put in, the size, then we'll get to that, and really those are the two kind of big buckets. So from an AML perspective, we've been looking and reviewing all the different stable coins, providers, how they take care of AML and anti-terrorism finance across the different jurisdictions in which they wanted to work with. Then data flows, obviously, how they update us for different flows that they were, playing up with, including on what's on chain, what's off chain, and the percentage of transparency of that. And size, our business will move only if there's a specific size involved. And let's say it's not in the tens of millions, but it's more in the hundreds of millions. Not so high in the hundreds, but relatively high, something that I don't have in my bank account anyway. And which I wish I did. But size is simply because then you lose money in the interest in the interest market, right? So you want this cash to be reinvested, and you only invest, and that investment has cost, and then in the interest rate environment that we're sitting now, unless you're really moving big numbers, you're not really even going to do it. So you rather not have cash than actually have it and then carry the burden of investing it. And also what currency we're looking at. A basket of currency to manage as an asset manager or as a custodian is harder if you, for example, don't work in the Thai baht, but you play more in Australian. So, how you manage all those currencies around, and if you have a global operating model, because remember, as you were saying, stable coins are global in nature, but then some of the asset manager or the custodians are sometimes not, and not in all the markets. So something like Libra would have wanted to be fully global, and that started reducing their focus. It kind of helped, and then also last thing, not many people want to have in the balance sheet euro or pound or US dollar, or what you want to have. So that's kind of strategic choice of your company as well. So these are all criteria that we had to play with when we play or worked in stablecoins projects.
Yeah, and these are significant, things that you guys think about that not everyone it's not obvious, right? And so thank you for sharing some of those gating factors, especially for an institution like State Street. All right, guys, believe it or not, we've blown through an hour. I'm going to turn the tables on Richard and have him participate in the lightning round, which is final thoughts, and keep them very pithy, 30 seconds on what are your final thoughts around the future of trading, and also or the other question could be, is if there are fintech entrepreneurs out there, everyone's struggling and trying to adapt and manage. If you have advice for an entrepreneur who's in fintech, what would you give? So you can either choose between future of fintech or what you're most excited about, or advice to an entrepreneur. So we'll start with Ben. Go for it.
30 seconds. I'll do the advice to an entrepreneur just from the blockchain perspective, since I'm in the investment space now.
Absolutely.
Focus on business value and commercial value with blockchain. At R3, we had a saying on the Corda side, and I'm sure if there's any colleagues listening, they still believe in this. If all goes well, it'll just say powered by Corda in the bottom right-hand side of your screen. The blockchain space is not a public billboard setting a technology. It's something that will run in the background that will make this whole process seamless, but it is not the end user business value. Articulate to your investors, to clients, this is the business value that we provide to you using some innovative technologies, but this is the commercial recognition that we can provide to you on that front. That's going to be the piece of advice I'll leave everyone with.
Thank you for that. Albert.
I would say, I guess which is quite ironic because I'm a lawyer and the only one on the call who's not a business person, but I think I'll go with the pitching to fintech. I mean, what we've seen a lot of is, I think you've got to remember, whether you're developing these arrangements internally or you're developing them for external clients, that you are operating within a highly regulated, highly risk management dominated industry, and you need to build something and pitch something that is workable and attainable within the confines in which the people you are pitching to operate. And I think there is recognition that technology can do a lot for financial services, and clearly it can, but we saw a lot of this in the kind of ICO craze of 2017, that people seem to be of the view in fintech that the law and the regulation will simply just adapt to you. And that's clearly not the case. And I think you've got to recognize, if you want a realizable sell into these organizations, you have to reflect and understand where they're coming from on their side of the fence. And so many people we see just go away and build a proposition, and they don't think about how FIs could actually implement it. And so I'd say, always recognize the environment with which these guys are operating in.
Great. Mike, 30 seconds.
I've got a stopwatch. Yeah, so I just wanted to have a parting thought on the market side. So we did see a lot of mention of new markets for fractionalized art or real estate or whatever it may be, right, and increasing access. Do not underestimate the complexity of building fair and stable markets. It's really difficult. So what I mean by that is you create bubble effects. So if we just go and create a marketplace around, let's say, tokenization of a piece of art, that could come crashing down very quickly. So remember, the fundamentals of like what values a piece of art, as an example, is just a public perception of that, right? So there's there's not a really strong, there's an underlying value, there's nothing really strong. So I think do not forget that, you need to create fair and stable markets. Otherwise, you're going to have people, you're democratizing finance, but you do not want to democratize bankruptcy. That's all.
Well said. And Richard, since you've actually created an exchange, traditional exchange, and you're also wear a different hat at Bequant as the global head of custody. So tell us a bit about what, or please piggyback off of what Mike just said, because I think that's very relevant.
Yeah, it is. Yeah. I think on the markets and trading side, it's really exciting at the moment. I think regulators are catching up. As Mike said, it's very complicated stuff, and I think they will catch up. But the good bit is going to take longer for these institutions to get in. Again, coming back to Michele's point, because you need the money there, and the customers will drive it, and institutions will drive it, and hopefully regulators will keep up with it. But I think the really cool bit is that there's loads of fintech, exciting fintech stuff around it. There's new market surveillance systems that are coming out from new providers using new things, not just the same, over the last 5 years, it's the same people doing market surveillance systems. You can tick them off, and it's good. There's new people coming into it, and there's new RegTech things coming in. So, it's quite exciting, and it shows you that markets don't just stay traditional. They will continue to change and evolve. Just takes time, that's all.
Very important. And we didn't even touch on RegTech, which is a whole separate webinar. If anyone's interested, tell us if you want these guys to come back. Michele, bring us home. Your last few words of wisdom.
I'll use 5 seconds. Find the problem, try to solve it, and make sure you have a mindset to change the way you're going to solve it. Explaining that means, be ready to pivot. We've seen a lot of startups that are very squared in the solution, while the needs of customers, we have needs and we're not very flexible. So as a startup, as an entrepreneur, you can. So work on your side of the equation. Don't try to change the need of a customer when that need doesn't change. And when you look at the retail the retail world, probably that it's completely different, but flexibility and find an actual need that you want to solve for.
Thank you very much. And with that, I thank all of you for spending the hour plus with us, and apologies to any of the questions that did not get answered. Thank you very much, audience, for all the great participation. And if you want these guys to come back, give us feedback, and perhaps we'll do a webinar part 2 to be continued.
Thank you, everybody.
Thank you. Back over to you,
Thank you very much, everybody.
Thank you,
everybody.
Cheers. Stay safe.
Thank you very much so much for joining us. A recording of this webinar will be made available online if you'd like to share with your colleagues, or if you didn't have an opportunity to watch it live. We have a series of other ongoing webinars which we will circulate as well. Thanks all so much for joining us, and have a great rest of your day.